This is Capital Markets. Welcome back from the break. Of course, we know the African markets is a major part of capital markets on this program. And we'll take a look at the Kenyan market. The Kenyan stock market fell sharply this week by 5.46% as investors reacted to the Supreme Court's decision to annul the presidential election won by incumbent President Uhuru Kenyatta. Now, the Nairobi All-Share Index finished at 3.69% in the red on Friday, starting the new month on a negative note. Numbers from other climes were mixed. Egypt, South Africa, as well as Ghana markets, all mixed. Now, FSDH says yields on Nigerian Treasury bills, particularly on the 364-day tenor, are likely to drop with the plan of the Debt Management Office to refinance the papers through foreign debts to the tune of $3 billion. Besides this finding, the analysis has some more projections. Mr. Ayodele Akinwumi, Head of Research and Strategy at FSDH Merchant Bank, is still here. But before the discussion, let's take you down memory lane on what the Debt Management Office expects of the restructuring. Here's what Ms. Patience Oniha of the DMO said regarding that program.
We're moving from a Naira borrowing to a US dollar borrowing. Remember the point that I said, the benefits of doing that. It is longer tenor and it is cheaper. So by the time that that borrowing in US dollars is due for repayment, several of the initiatives and policies of government would have materialized. So you're not looking at repaying next year or 2 years' time. So the Naira is either stronger in terms of exchange rate or at best remain at current levels.
That's the Director General of the Debt Management Office, the new DG, I must say, and Ms. Patience Oniha. Mr. Ayodele Akinwumi, thanks again for standing by. Do you agree with what the Director General of DMO said? We are likely to have liquidity, the Naira is going to be stronger.
Okay, thank you very much again. That's analysis of the DG of the Debt Management Office is in line with our research report that we issued on the possibility that when we mentioned the fact that the yield on Treasury bill, we expect that it's going to decline. Yeah. It's imminent. And a little bit of a background to this. The Debt Management Office manages the debt for the federal government. They have a strategy, debt management strategy that they are implementing, which started in 2016 to 2019. Yeah. And that, what they said in that document is the fact that they want to alter the debt mix versus the debt mix in terms of the local debt, domestic debt, and the foreign debt. They want to move it to what they call the optimal debt mix of 60% of total debt of domestic debt and 40% of foreign debt. Now, at the moment, we are at 22% foreign debt and 78% domestic debt. Okay. What are they doing with? Why are they doing that? With the overall objective, like mentioned earlier, to reduce the cost of borrowing for the federal government. Now, they want to ensure that the long-term component of the federal government debt is increased to 75%. Now, at the moment, it's around 70%. And what are they doing? They're going to refinance the domestic debt to foreign debt, which is cheaper for the federal government. And eventually, when they achieve that, you will realize that the weighted average cost of borrowing for the federal government will reduce. When we bring in more money, borrowing from international market, what you are going to have is that you're going to increase the stock of foreign exchange in Nigeria, which is what the DG is trying to say, that, of course, with all the policies that the federal government is trying to implement here, we will likely see appreciation in the, the Naira, the value of the Naira. Okay. At the moment, we have about 3.6 trillion naira. The total debt actually, as at March this year, was about 19